Give us a sense of why we're getting the success we are. First of all, tell me, where does the stuff come to in South Carolina from? Where are the places you're getting it from?
So about half of our volume is Asia and Indian subcontinent, and then the balance would be Europe and Australia, New Zealand, and South America. And we're seeing record volumes. We, as you said, up about 10% year over year. A lot of that is imports, which have grown significantly. A lot of people are shipping ahead of the tariffs, and we're doing what we call front loading. Exports are down a bit, mainly in basic commodities, and then empty containers are up significantly because as you increase the imbalance between imports and exports, you have to move empties back to where they're needed. So we've had a strong year, and we're watching closely to see what the future holds.
Well, you just made a critical point, which is we tend to think when tariffs go into effect, it will reduce trade. It may, at least in the short term, increase it because people are trying to get ahead of those tariffs. Are you anticipating perhaps a tougher year next year?
We have certainly forecasted less growth. I mean, we have forecasted about 2.5% growth for the next year. We're cautious. I mean, I think you could make a case to forecast modest growth or a little bit of a modest decline. But we've got some projects that are giving us some optimism. And I think, generally speaking, the East Coast ports are growing relative to the U.S. port market overall because of the expansion of the Panama Canal and the fact that big container ships can come to the East Coast now. So I think we think the Southeast tends to be the best place to be in the port business because we have both population growth, which drives imports, and we have manufacturing growth, which drives exports. So we think that we'll grow probably double the U.S. port market going forward.
Well, that's exactly the question I had, which is how much is this market share and how much is overall market? You got almost 10%, and you said you're growing about substantially more than other ports are. So if you take that 10%, roughly 10%, how much would you allocate to the overall increase in shipping as opposed to specifically you taking market share for some other ports around the country?
Well, I would again say the East Coast ports across the board are growing, fairly significantly. Over time, that has come from the West Coast ports as big ships could come to the East Coast. I think you have to realize that 70% of the population in this country is east of the Mississippi River. So the people want to get their cargo on ships closer to where it's needed. And I think that we will grow above the market because of the factors that I mentioned before. Although I think we've always thought that the growth would slow down because the U.S. economy has been on a 10-year run. It has to slow down a bit at some point. And it seems that the Chinese economy is slowing down a bit. If you look at their reporting on imports, their volumes are down as well.
And you said at the beginning that roughly half of your business comes from Asia, not just China, but Asia more broadly. Are you seeing any shift among the allocation of the sources of your trade at this point? Because we've heard that some U.S. companies are changing their supply lines.
So about 60% of Asia trade with the U.S. is historically China, basically. There was a move afoot even before this trade dispute to move that production further south in Asia because of the rising cost of production in China. Wages are going up, things of that nature. This trade uncertainty has accelerated that trend. I mean, there's sort of been a +1 approach, meaning that if you were sourcing in China, you were instructing your manufacturer there to find another location, be it Vietnam, Indonesia, Cambodia, places like that. So that trend is accelerating a bit, but I think one has to realize you don't change sourcing and supply chains overnight. It's a fairly complex issue, and it would take some time to see the impact of that. Whereas on the export side, basic products like soybeans and plastics and things of that nature, which we ship quite a lot of volume in, those can change much more quickly.
And Jim, what about Mexico? I'm assuming that an awful lot of the trade with Mexico comes across the border in trucks rather than coming in on ships. Are you seeing any diversion or Mexico stepping up and getting more trade perhaps as things come away from China?
So we do. You're right to say that we don't handle much of that by ship. It mainly comes by truck. I've always felt that Mexico would be a winner in terms of diversification of supply chain and sourcing from China. It makes sense because we're on the same continent. So I think they will do reasonably well. But I think what one has to remember in our industry, global shipping has been constructed based on trade with China. I mean, 20,000 TEU container ships, large container ships, which is a real theme of this industry, are built to serve China. And to the extent that you're successful in moving supply chains to Vietnam and Cambodia and countries with lesser developed port systems, that creates a challenge in terms of supply chain reliability. So that's something that people don't talk about a lot, but it's a factor that has to be considered because supply chains are really, in the end of the day, about risk and reliability.
Right.